As of August 2023 numbers, the consumer price index rose 4% year over year compared to 3.3% in July. If you don't know who I am, my name's Joe Kehoe. I'm a realtor here in Belleville with Royal LePage Pro Alliance, trying to keep you well informed about the local real estate market and how macroeconomics affect that. This week's video is going to be a breakdown of the CPI numbers for August of 2023 and my thoughts on how it will affect the real estate market. So let's get into it. As mentioned in the intro of the video, the Consumer Price Index, or CPI, increased 4% year over year as of August 2023, compared to 7.01% from August of 21 to August of 2022, and 4.09% from August of 2020 to August of 2021. Now, these 3 years together comprise a 14.7% increase over 3 years, which is much higher than the Bank of Canada target inflation rate of 2% per year. How does CPI affect the real estate market or housing? Well, shelter is part of the basket of goods which encompasses CPI, not only house prices, but mortgage payment prices and rent prices. So over the last 3 years that I just previously mentioned, shelter has grown 17%, so more than the CPI, and only 1 month during this 3-year span did it ever decrease month over month. So why are we seeing an increase in uptick in CPI for August of 2023 compared to 3.3% in July of 2023? Well, a lot of this honestly has to do with gasoline prices. Gasoline prices were up 1% year over year in August, and they were down 13% year over year for July of 2023, which skewed the CPI, I think, to a lower number than what we're actually seeing. So if you take gasoline out of the basket of goods, August and July are both the same at 4.1% CPI, which is obviously above the target rate of 2% the Bank of Canada has. Who are the proverbial winners and losers in this CPI basket of goods? Well, mortgage payments are up, rent prices are up, grocery prices are up, whereas discretionary items such as travel tours and air transportation is down. So this shouldn't really come as a surprise. People are spending less money on discretionary spending such as travel and more money towards necessities such as shelter and groceries. Rent prices are up 6.5% across the nation. Grocery prices are up 6.9%, and mortgage interest payments are up 30.9%. So these are huge increases also compared to last year, where we already saw huge inflated increases. Now, here's where it gets kind of funny, because Bank of Canada is trying to curb inflation by increasing rates, right? But shelter is something that's in the basket of goods. So if mortgage interest is increasing 30% year over year, that's going to skew the CPI numbers to show a higher rate of inflation. And then Bank of Canada wants to increase interest rates to now curb that inflation. So it's kind of a cyclical thing and a paradoxical consequence if you think of it that way. And that also impacts rent prices, right? Because if you're increasing mortgage payments, now landlords are going to be squeezed. They're going to have to rent evict people. They're going to have to raise rents, which raises rental prices. And not to mention, if you're a first-time investor or a novice investor and you have a variable rate mortgage, you're probably thinking about selling off that cash flow negative investment property, which now displaces a tenant for an end user, which squeezes the rental stock, and now there's more competitions for less rentals. So this whole thing kind of goes in on itself and is a vicious cycle. After all this ranting and all this data, what do we do with all this? And what does Bank of Canada do as far as increasing, decreasing, holding rates? Well, it's kind of mixed opinions around the industry. Some people think that they're going to keep increasing rates until we see inflation under control, and these inflation numbers are higher than Bank of Canada's target rate at 2%, so that would suggest that we're going to see another increase even after we paused. Others say the housing market's seen a slowdown and, seen enough hurt. The GTA's benchmark price is down 3 months in a row, so that would suggest a housing slowdown and maybe not a need for rate increases. So I don't really know, and I don't think anyone really knows what Bank of Canada is going to do, and I don't think they really know until they make the decision. So there's some food for thought, a little bit of info on August CPI numbers. Let me know what you think, and as always, thank you for watching this video. Hopefully you found it informative, and stay tuned for another one next week.